Hi, everybody. This is Yael Tamar, co-CEO and co-founder at SolidBlock. And today I'd like to talk to you about decentralizing asset trading. Okay. All right. What is centralized finance? Centralized finance essentially is traditional finance where banks govern and control people's assets, right? Where we're using either central banks or some sort of intermediaries. By contrast, decentralized finance is open finance, where individual is their own bank, right? They're the sole custodian of their assets. Usually some sort of an open source protocol is used where you can create new products and instruments. In some ways, this space still mimics traditional finance in terms of products and abilities, right? Such as loans and derivatives, but we're expecting to have a lot of the new assets coming out in the near future on this decentralized finance systems. And I guess the most interesting part about the open finance is transparency of the whole process, right? Of issuance, repayment, loan collateral, all of that is super transparent. And in the next few slides, I will explain why the recent events that we saw in the news in the last, I guess, month can be really used to illustrate the advantages of decentralized finance. So when we're looking at GameStop and what that brought on, what really kind of irked the majority of the blockchain and crypto ecosystem, as well as many of the traditional ecosystem players, was the fact that the rules that the SEC has set up and the just all of the system has been set up in a way that was conducive to the institutionals and less conducive to the individual investors. And that brought on a lot of attention to the system and how the system could be improved, right? So what we seemingly saw is that rules can be broken, suspended, or revised with minimal consequences by these big players, right? When we're looking at Robinhood and that story, right? So Robinhood is a trading platform in the US that had to halt trading for certain stocks because of cash flow issues. That's how they explained the reason behind them closing the trading, right? So the CEO of Robinhood basically came out and said, well, it's not our fault. What had happened was that because a lot of people were selling stocks, we just didn't have enough cash. And why do we not have enough cash? Well, that's because the rules of the the United States of settling require this what's called T+2, which is the settlement time. It takes 2 days basically, right? And when there's lots of people selling stocks, they need to obviously be paid, right, in US dollars. So Robinhood had to borrow billions of dollars and was still short on cash. So and the CEO came out and said, I'm sorry, this is what the decision we had to make, is to restrict individuals from selling, right? It's on the one hand, whether it holds water or not is dubious, because when institutions make these decisions, we've never seen this happen, right? So, and the CEO came out and said, well, we need a system which probably technology can solve, and that system will enable instant settlement. Well, I guess, he may or may not have heard about blockchain and decentralized finance, and that's exactly what decentralized finance is doing. And the final point that I wanted to make was crypto, right? So Elon Musk made history when he placed his full support behind Bitcoin during a Clubhouse stream. Crypto market cap right now is over $1 trillion, and crypto is becoming the new frontier for decentralized financial platforms and markets. Why are all of these things significant today? Well, let's look at DeFi. What happened to DeFi in the last year, decentralized finance? Last year, the product on DeFi reached $1 billion. Today, it's approaching 30 billion, right? So you see the growth is enormous. So just some examples of DeFi applications, right, that you can build on the premise of decentralized finance is Maker, central bank on blockchain. It's made it to let users borrow DAI against certain collaterals, right? Up until now, they mainly collateralized crypto assets, but right now they're starting to collateralize other digital assets as well as real world assets. There's some additional examples like Uniswap, which is an exchange. It allows exchange any ERC20 tokens on chain. There are different liquidity pools that allow users to earn commissions, and their business model is a fee that's distributed among liquidity providers. So those are some of the interesting business models, and of course, stable coins like DAI and Tether, and some other applications as well. So how does that all relate to tokenization? So let's briefly revisit what tokenization is. It's basically two things: securitizing and digitizing an asset at once. Securitization is a very plain vanilla process, just dividing an asset into shares that you can sell to investors, while digitizing is issuing these securities on the blockchain, meaning recording the ownership of the real world assets such as real estate or anything else basically on the blockchain, right? So these digital securities are called security tokens. They can be traded on ATSs. They can be traded on traditional exchanges as well, right? So right now, tokenization is going to transform two things. Number one is going to transform the way real estate is traded, is bought and sold. So that's one type of transformation. And the second type of transformation that tokenization is going to cause is actually all kinds of additional products that we're going to see to come into the market, right? So the reason that tokenization is relevant right now for real estate is the fact that in the traditional asset world, demand for liquidity is very high right now. And partially it's because out of the 300 trillion global property value, only 1% is liquid. So that's just about $3 trillion worth of property that's liquid. And you can see the enormous opportunity that we have in the market. Also, there is a regulatory breakthrough in retail investing and accredited investor investing in the United States, which kind of caused for that revolution to be brought on to the rest of the world. Blockchain, of course, caused this big shift towards trading of the assets because it's much easier to do that on the blockchain. And of course, COVID-19 changed everything, where people are much more comfortable buying things online and are looking for liquidity, right? So my second argument is that tokenization connects centralized assets to DeFi, to decentralized finance. How does it do that? Number one, most physical assets ownership is recorded in centralized databases right now. So tokenization allows to partially decentralize the ownership structure, bringing assets to DeFi. Right, and for full decentralization, we need governance protocols that determine real-world asset transfers. Right, so right now, whatever we do when we tokenize assets, we cannot fully decentralize the process, because in the real world, there's always a corporate structure that usually governs what happens to that asset. So there is always an element of trust in that organization's ability to make the best decision on behalf of the investors or token holders. So in order for this process to be fully decentralized, that organization needs to be governed by the individuals that hold the token. And that's actually something that SolidBlock is working on right now to enable that kind of structure. So when we look at the solutions that will be enabled by tokenization, let's think about kind of these traditional finance solutions that we see, even by the existing of, let's say, digital money, right? When you have a bank that enables you to, if an individual has an access to a bank, they have access to a lot of services, such as loans, such as being able to invest in different products, credit card payments, and things like that. When we're taking that to the world of DeFi, what's interesting here is, of course, being able to create frictionless global transfers, right? To use the stable coins and other crypto assets to facilitate global settlement, right? So to facilitate global investment and global trade. I mentioned settlement, right? So global decentralized clearinghouses for exchanges. In fact, I think that exchange location is going to be largely irrelevant, and the exchanges are going to start being a part of a global system. I'm talking about both traditional stock exchanges and ATSs and crypto exchanges being a part of a global network with market makers facilitating the clearing, and definitely new services offered by these blockchain-based clearing houses. So I think that's really the future in terms of the trading infrastructure and trading platforms. Indices, funds, and derivatives is obviously a given, especially in products like real estate, where a lot of people are just interested in owning this asset class as a way to stabilize their portfolio and lower the overall risk level of their portfolio. Collateralizing of tokens to secure loans, that again is a given. It's a very classic example in DeFi. And I think the more interesting application would be to collateralize the tokens to get loans from traditional lenders, right? I'm wondering where banks are going to go with this, and where online lenders and alternative lenders are going to embrace these collateralized tokens, securities. And of course, connecting to other DeFi funding sources, being able to utilize existing networks with investors and these tools. Now, I'm wondering what other non-obvious products we're going to see in the next, let's say, 3 to 5 years, or maybe even less. And if anybody has ideas, I'd love to explore. Reach out to me on LinkedIn or email, and I'd love to brainstorm and see what else is coming up. Thank you so much.